Hi, my name is Ashok. I'm from FinEx Training Institute. We are providing free classroom training in Mumbai for one entire month for CFA aspirants so that they themselves can decide if they wish to continue this certification. Please feel free to contact us for further details. Thank you.
This video is tell you the format for indirect format for the indirect method for calculating CFO. So indirect method of calculating CFO. So I'm just going to put down the format and the reason why the format is like this so that it becomes easier. Okay, so see, first of all, because this is an indirect method to calculate cash flow from operations, we should begin with net income because we are going in the descending order. Just imagine the income statement, and in the income statement at the end we are getting net income. So from net income I'm going to begin the story as it is an indirect method. So from net income, how I can do all the rectifications or adjustments and then um, find out cash flow from operations. So that's what this topic is all about. So beginning with net income. Okay, then what I will do is, you know so I'm just you know uh, framing the scenarios over here on the left hand side, and on the right hand side I will come up with the format. Okay, say for example, first one, sales. Now imagine there is a sale for 1000, and then depreciation, let's say there is only depreciation after sales, so let's say depreciation is 300. So in this case, your profit or net profit is going to be 700, assuming only these transactions are there. So profit is going to be 700. Now in this case, can I say that my cash flow is 700? No. Reason being, depreciation is a non-cash item. So because it is a non-cash item, so this 1000 sales, 1000 is still in my hand. So the cash is not exactly 700. Even though the net profit is 700, the cash that I have in my hand is 1000. So I can put this like a proper format here. Like, let's say I will begin with net income or net profit 700, and then from here I will go up. So when I go up, I am seeing depreciation of 300. So now I know depreciation is a non-cash item, so this shouldn't have been deducted from cash perspective. So cash perspective, depreciation should not come over here. So what I will do is, because here it has been reduced depreciation, I will add back the depreciation. So I'm just rectifying all cash's perspective. So cash perspective, depreciation is a mistake, so I'm rectifying it. So I will have 1000 rupees in my hand. So this is cash flow from operations, 1000. So that means, what did I do to find out cash flow from operations? I added depreciation. So that means, format perspective, from the net income add back depreciation, also called non-cash charges. Depreciation also called non-cash charges. So this is the first point. Okay, then the second one, sales. And then sales is, let's say, 1000, and then plus, let's say, gains from revaluation of assets, gains from revaluation of assets. So that came to be 300, and so total comes to 1300. So imagine, if this is the only transaction, my net profit or net income will be 1300. But however, do I have 1300 in my hand? No. Reason being, this is coming from revaluation of assets. So practically, just the value of the assets has been increased, but otherwise the cash has not gone up. So for that reason, when I will calculate cash flow from operation, I will begin with net profit or net income 1300, And then you see when I go up, you know, so when I go up in the reverse direction, I see that gains from revaluation of asset doesn't make any sense to me cash's perspective, because it is just the revaluation, not the actual cash. So this has been added unnecessarily. So what I will do is I will reduce this gains from revaluation, gains from revaluation of assets. So 300, so this 300 I'm going to reduce. So my cash flow from operation is 1000. So that means that comes to the second format. Second rule of the format is minus uh, you know minus non-cash income. So this is non-cash income. So first one was non-cash charges, this is non-cash income. Example of non-cash income is gains from revaluation of assets. Gains from revaluation of assets. This is the second rule. Then third one, third one, let's say sales 1000. Okay, and then interest, imagine interest received is 300. So now you have 1300 in your hand. So net income is 1300. Now suppose, now the question is, what is cash flow from operations? Now suppose, now before I tell you this further, you need to know some rules. See here, I'm just writing it down here. See, this is US GAAP. As per US GAAP, what is the treatment for the interest received as per US GAAP and as per IFRS? So interest received, interest received as per US GAAP, it will go into cash flow from operations, and as per IFRS, it will go into cash flow from operations or else cash flow from investments. Now imagine you are following IFRS. IFRS followed and IFRS followed, and your company um, wants to categorize income received under CFI. So company categorizes categorizes interest received as CFI. Now because it is categorized as cash flow from investments, so now when I'm calculating cash flow from operations, so net income is 1300. Now from 1300, when I go back in the reverse order, I see interest received 300, but now I know this interest received doesn't belong to the cash flow from operations. So what I will do is I will minus this interest received. So interest received 1300 minus, so I will get 1000. So this is my cash flow from operations. I can open another you know uh, account over here as CFI, and under CFI I can say interest received 300. So interest received 300, positive 300. Okay, so this way I am going to do the adjustment. So my cash flow from operation is 1000 only here. Okay, so now how do I convert this into the rule of the format? So third rule is, so what did I do now? I have reduced the interest received because it was it did not, it was not supposed to come in CFO, it was supposed to come in CFI. So that means undeserving. So undeserving cash income. So what I should do is minus undeserving cash income. So what is that undeserving cash income? Example, rent received. Sorry, not rent, interest received in this case. Interest received. So I'm supposed to minus undeserving cash income. Similarly, fourth one, let's say fourth one, sales 1000. Now in this case, imagine interest paid 300. So 700 is your net income. Okay, interest paid 300. So 700 is your net income. Now, suppose now interest paid, let's say, I'm just continuing here, interest paid. See, interest paid will come under CFO in US GAAP, and interest paid will come under CFO in IFRS or CFF, cash flow from operations. So imagine you are following IFRS followed, and company categorizes interest paid as CFF, cash flow from financing. So if it is following the practice of categorizing interest paid as cash flow from financing, so in that case, how will I calculate CFO here? So net income is 700. So this one 700. And then when I go back and check the transactions, interest paid. So interest paid, I am categorizing as CFF. So it doesn't come under CFO. So because it doesn't come under CFO perspective, this is an unwanted reduction. So I will add back that interest paid. So interest paid 300. So this is my cash flow from operations. Okay, and I can open another account as CFF, where I will show interest paid negative 300. Negative 300. Okay, so this is, so how do I convert now into the format? So undeserving cash income I mentioned. Here I will add back undeserving, okay, undeserving cash expenses. Example, interest paid. Undeserving cash expenses. Example, interest paid. Okay. Yeah. So this is how the format is going. Okay, it is not going in the, like, uh, content wise it's fine, but then look wise, it's not going in the proper, straight order. That I hope you can adjust it. Okay, so 1 2 3 4, and then next one, next one is fifth one. Let's say sales 1000, and then salary is 300. So total 700 is the net income. Sorry, yeah, net income 700. And then imagine in the balance sheet what you are finding is opening salary is 500, and closing salary is, let's say, 600. So because opening salary is opening salary, so opening, or instead I should say, yeah, opening salary, opening outstanding salary, opening outstanding salary and closing outstanding salary, outstanding salary. So now what does this indicate? See here, 300 represents the total expense for that particular year, 300. However, over here I can see that 100 is not yet paid, and that's why 500 became 600. So actually my um, expense is only, the cash expense is only 200, because 100 I have not paid, and that's how 500 became 600. Okay, so here I have not paid 100, so that means my cash salary is 200 only. I have paid only 200 as cash over here. So that's why now when I will convert this into indirect method of CFO, so net income 700. Now I know, when I look at this current liability, when I look at this balance sheet current liability, I can understand that uh, this current liability has gone up for me. So because the current liability has gone up, because the current liability has gone up, it shows that I have not yet paid 100. Okay, so here it says 300. 300 is the expense incurred, but I have not paid 100. I paid only 200, only 200. So 100 is still with me. So because 100 is still with me, so I will add back this 100 plus outstanding salary for this year, 100. So my cash flow from operation will be 800. So moral of the story, when the current liability is going up, I am supposed to add it back with the net income. So here fifth point is add when current liability goes up. When current liability goes up, you should add it to the net income. Okay. Similarly, now let me go for the next one. I hope I get enough space here. Sales 1000, then salary, imagine 300, so 700. Okay, and then when I look at the balance sheet, what I find out is opening outstanding salary 500 and closing outstanding salary, let's say 400. So what does this indicate? So this indicates that I have paid 300, and also now this, because 500 has come down to 400, that means I have paid 100. Last year's salary also I have paid 100 here. So that means my net income is showing 700. However, net income is 700. However, now when I look at this balance sheet, I get to know that I have paid more. I have paid last year's salary as well, 100. So minus salary paid. So outstanding salary paid 100. So I have only 600 as my cash flow from operations. So that means because my current liability has come down, that means I have reduced my current liability, I have paid more. So that's why from the net income I'm supposed to reduce that amount. So minus when current liability comes down, when current liability comes down. Okay, so this is how you are supposed to treat for current liability. In short, current liability, when it goes up, you should add. When it comes down, you should minus. So it has direct relationship. Direct relationship. Then seventh point is pertaining to assets, current assets. Okay, so current assets, say for example, let me write here only 7th point, sales. Okay, so sales 1000, then minus, let's say, other expenses 300, so which is fine. 700 is the net income. However, when I look at the balance sheet, what I get to know is, let's say, opening account receivable is 500 and closing account receivable is 600. So what do I learn from this? So what do I learn from this? 500 is changing to 600. That means 100 more, 100, credit sales has happened. So from this 1000, 100 credit sales has happened. Okay, because 100 credit sales has happened, that's why this 500 account receivable has become 600. So how I will give treatment of this one is, see, first of all, net income. So net income 700, and here, I will think that all transactions are fine only, but then when I will come to this balance sheet, I will know that 100 credit sales has happened or account receivable has gone up. So the rule that I'm going to follow is, because account receivable has gone up, okay, that means I have not got this cash. 100 cash I have not got because it has gone as credit sales. So I will reduce this from the cash transactions. So minus uh, account receivable, increase in account receivable 100, so it will come to 600 CFO. So that means moral of the story, minus when current asset is going up. When current asset is going up, you should minus, because here current asset is going up, I am doing minus reduction over here. Okay, so then the last one, let's say here I'm writing now sales 1000, then other expenses 300, so 700, which is fine. Now net income. Now what happens is, opening account receivable is 500 and closing account receivable is let's say 400. So what does this indicate? This indicates that I have 700 net profit as per the income statement. However, I have also received 100 more, which is, let's say last year's credit sales. So 500 has become 400. That means I have received 100 more over here. So how I will treat is, my net income is going to be now, net income is going to be 700. And then, because when I come here, I get to know that I have received 100 more. So I will add that 100 as well. So that means when my current asset is coming down, that means it is getting converted into cash, which is good for me. So I will add back, so I will add that 100, I will add that 100. Okay, so here it will come to total 800. So now how I will write in the format is, add when current asset goes down, or comes, when current asset comes down. So when current asset comes down, you should add back, comes down. So in short, these two are having inverse relationship. That means when current asset goes up, you should minus, and when current asset comes down, you should add. So this is called inverse relationship. Inverse relationship. Okay. Inverse relationship. Right. So these are all the 8 rules that you should follow. This forms the format. So this forms the format. So starting from here, 1, 2, 3, 4, 5, 6, 7, 8. So these are the 8 rules to calculate CFO. So when you do all these adjustments, finally what you will get is cash flow, total cash flow from operations. Okay. So this is the indirect method to calculate cash flow from operations. Thank you.